Wake up, motherfucker.
Yo, what's up? Alright, just do another quick update. Nothing much. As expected, market went up again. That's what I said. Sunday morning. Alright, so what else we got to talk about, really? Let's see here. Got that. Alright, let's see. Come on. Okay. Screen. All right. Let's see. Okay. All right. Let's see. Let's see where oil's at. Oil stocks anyway. XOP. All right. Back to where we got that last blow up here from late March, right? From the options expiration into the end of the month. And we're done here. So everybody's wondering, when should I get back in, right? So I think we're gonna go sideways for a while, man. So I don't think there's anything to do there, really. It might go down another one. It's down 4%. Let's see for XOP ETF. So let's see. This one goes down another 4. Okay, 4 or 5%, maybe down another 4 or 5% sometime down the line. Okay, how about this one? XLE back here, 3%. Okay. Yeah, we're probably going sideways from here on out. I think just have to figure out what the range would be here. If people run out of the oil stocks, though, if they start chasing that thing way too late, I could see it go down lower, I suppose. So that's kind of like why I said, okay, you just go back to software stocks. Software stocks just makes more sense to me. You got this double bottom here, this thing trying to get back up, right? So it's sort of like, well, come on. If the market is going to go down, we'll have to check based on this. Let's see here. We got up to the last point, touched right there, touched that purple line, 18-day moving average. So that's probably where we're going to stop for now. Will it continue up? Maybe a little bit more higher. So let's see what the index is. So remember, I drew this last week. So the first one I drew from the beginning of the year, right? This first gray line here, doop. And I said, like, yeah, we're just going to pump or something like that after that. Okay, now I changed my mind. Last week I said, nope, we got to go back up for a bit because we're going into the end of the quarter and you're hitting these JP Morgan areas. So it's like, okay, zoom in. Perfect. You see that? We're going that way. So a little bit more. Maybe a little bit more. Maybe 6,700 on the S&P. And then we go back down. But are we going to go down this deep? Well, we have the new JP Morgan caller numbers. Okay, so let's see what they are. All right, let me get that crap. And then we'll know where we all want to be. So you might be thinking, oh, man, I got a crystal ball. How did I guess the gray lines that well? Bro, I just drew it randomly and if you follow charts day in and day out, they have patterns. They repeat. They're fractal. You'll see them again and again and again over time. They're called waves, Uh, and I've been saying, like, one of these days, maybe I'll talk about waves. But I don't like talking about them because I think it's astrology, It's like people already hate charts. They already call them astrology already. So if I'm gonna be talking about fucking waves, you're really gonna be like, whoa, this guy's just talking about like tarot cards or something. Yeah, basically they are. Essentially, it's just all psychology anyhow. So they repeat in waves, right? So that's it. Very easy. So it's easy to make money, man. I think, at least I think so. fuck, you could just be trading this all day in. So when you have a market like this, you got a lot of volatility. It should be pretty simple. Okay, let me get my thingies here. Get the links. What link do I want to talk about? What tweet do I want to talk about? Okay, JP Morgan caller. Okay, then I'll put this up here. Okay. San Jose. Yeah, he's fine. Like, did you catch his recent streams? He was on Universal and he had his own streams for a while. So, yeah, he's fine. He's blaming the blacks on his on his little seizures there. There you go. So that's it. Okay, let me see. Blah 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 blah. All right. Let's see if this loads. Okay. All right. Okay. All right. Okay. JP Morgan. Let's see. All right. Let me get the images loading though. All right. Okay. Let's see. Does this fucker even load? All right. Okay, let's see. Yeah, so these are the new levels. 6,840, 6,150, 5,190. So that means your guardrail for the S&P 500 can go up to 6,840, not much higher than that, because you remember the blue line is a magnet. So if it's coming from the bottom, it's going towards it. If it's coming towards it. So if the S&P 500 tries to get above 6,840 for the next 3 months, it's going to go back down. So that's what's going to happen in the next 3 months. Now, if you have the red line right here, right? So let's say the market is going to fall towards 6,150. It'll try to bounce off of it. So this magnet is reverse polarity. So that means you just have like you get sinking down here and it'll try to push you away. Now, if you break down below it, however, you're going to go straight down to 5,190. So if we do this early enough, because this is the beginning of the quarter, it's easier to do this, right? When you get towards the end of the quarter, like last quarter, we did break below the JP Morgan that was set on the first quarter. And, we didn't get very far below the puts level here. Okay. So that's your new level, 6,150. So let me bring back up the thing. Exactly why everything's going. Let's see. Stop screen. Yeah, San Jose, he's fine. He's fine. I don't got time to play any clips, though. I can only come in and out this week. This is Holy Week. You guys should be worshiping Jesus, not caring about how to make money. Come on. Okay, anyhow, so you see here, if we drop, the next level after breaking the orange line is this purple one. This orange line was the last top made in December 2024 and then again in February 2025 before the tariff tantrum. So this 6,099 level is pretty close to where that JP Morgan is. What was that? 6,150. So I don't know if we're going to get down to that purple line unless there is some big new event that will everything down. Okay, it has to be something significantly new that we don't know right now. That means like massive attacks on refineries, massive freaking freaking boots on the ground doing all kinds of shenanigans, right? If that happens, then yeah, bye-bye orange, going straight down to purple. But if there's nothing going on of that significance, then it's probably just going to be earnings. Earnings will start with TSMC around probably tax day. So maybe April 16th. We don't have an official date yet. So sometime around April 16th on Thursday morning will be TSMC, maybe, if that happens. So that's when you'll get your first earnings for semiconductors. And then the rest of the earnings will come in like what, late April into early May. So those will be your next earnings. So if there's nothing new going on in Iran, everybody's just going to wait for earnings. And that could be enough to start slowly working this way back towards the orange line, because that's the only thing protecting you now is the JP Morgan level. So we're going to head down towards the orange line. That's if we break this dashed dotted blue line here at 6,478, which was where the old JP Morgan level was, and where we kind of dip below towards the end of the quarter. So now this is just end of the quarter, beginning of the quarter noise, right? So I don't know what's going to happen. Are we going to have news over Easter? Trump's supposed to say something tonight. I don't know what that's all about. I guess maybe that'll be enough to pump it a little bit higher, or maybe not. Maybe we'll just go straight back down. I don't know. So that's up to you guys to decide. I think the easy money was made. You go long, go up. So yeah, that's it. That's all you gotta say about that. SOXX. Do I short here? I think, well, I did start a short again. So yeah, I went long on Monday after into the close, and now I went long. Okay. Well, let's see. Did I have anything to show for it? Okay, how about this? Okay. Okay, let's see. So here, I don't brag all the time, guys. A time though, I'll just show you how easy it is to make money with just 10%. All right, you just need 10%. Once you get 10%, that's all you really need. Like, there's nothing else you really need to do. Let's see. So let's see. Let's see. 20 portfolio positions. Okay, let me see. All right. Okay, so let me show you this. And then I'll be on my way. Okay, here. Okay, so that was what I made from Monday, right, with SOX L. So I just used SOX L so you could see SOXL. Okay, that's it. So you can just make a few thousand every trade. You do 20 trades a quarter, you make 20,000. If you just have like a 20K account, you could easily do that. Or you just do the aggressive way and just do 1,000 and then build it up using compounding, like I showed you last time with math, right? But then again, you gotta be pretty consistent. But that's it. That's all you really need. Like a 10% here, 10% there. If you got 20, right, you just make 2 G's each way. If you have 10K, 1 G each trade, and you just have a few trades a quarter, just do 20 trades a quarter. Limit yourself, restrict yourself. Only do the trades that are very actionable, like they have high probability of succeeding. That's it. You don't need anything crazy, nothing too fancy. Okay. All right. So let's see. Let's look at the Gold miners. So like I said yesterday, I said it's gonna get into that pink zone and then just gonna be kind of like, what is it gonna do there? Is it gonna go to the top of the pink, stay inside the pink, drop from the pink and go back below? I think we're just gonna zigzag around here for a while, but it just jumped right into the middle of it. So kind of hard to tell what you want to do with this. I think overall this thing looks bullish from a technical standpoint. So like it should be able to tag the top part of this pink area for GDX. So what's that from here? I don't know. So let's say it goes to the bottom, right? And then you want to trade this again. So you go from the bottom to the top of the pink, that's 10% range, okay? Or let's say it goes to top and you want to short it, then that should be another 10% down the other direction, correct? Okay. So yeah, you could just do that. You could just zigzag, zigzag. Eventually, though, it will just pop up or crash back down after it completes this. I don't know how long it'll stay in here. I don't think it knows what it wants to do right now because now you're fighting the yen. Because there are little chatter that the Japanese do not like the yen being this low. So 160 it hit there. So that means 160 yen. If it gets any higher than this, it's getting way too devalued. So if there's manipulation in the yen coming down the pipe, I don't exactly know what it does for gold, but it will affect gold because you have to see how that affects the bonds, the Japanese bonds. Right now, the Japanese bond is pulling back. Okay. I mean, not pulling. Well, okay, the yields are pulling back. That means that people are buying the Japanese bonds, but yeah, it's kind of like we're at the point where we have to decide what we do here. The last high was in January 19th. That was probably where the peak of gold was, right? It's probably close to where gold and silver peaked out. Yeah, pretty much, pretty close. Probably a few days before the final high of gold was there. And then you're here again. You're kind of like wondering, well, if the Japanese yen, Japanese yield, the 10-year yields don't go back, Japanese yen is being manipulated, how does it affect the yield? So that's why I said, like, I don't like playing this shit, honestly. Like, the only time I like GDXU is when there's a trend, okay? When things are going in a straight line. When you're in a range, it's like, well, where's the bottom? Where's the top? What's going on? What happens if it's in the middle of the range? What do you do then? Do you believe it's going to go back to the top or not? Or just going to fail here and just go straight to the green again and then completely collapse and go back to red? Because the red is the real zone for gold miners for this ETF, okay? Because this was set in 2011. Or not 2011. I mean, let's see. This is 2000. Yeah, this is 2011. This top red line. Yeah. That's right. That's 2011. Okay, so yeah, I'll use the weekly. Okay, here. So this is 2011. That's the top. That's the top. It's going back. If it crashes through the green, it's going towards the red. If it stays here, however, it's going to zigzag a few more weeks before it decides, okay, let's revisit the top again. So you could trade it really nicely if you know where the tops and bottoms are. If you don't know, if you can't tell, I wouldn't touch this damn thing. Okay. But of course, if you can do it, you can clearly see it has very good characteristics. So because sometimes it does nothing, right? It just goes sideways. And then all of a sudden it decides, oh yeah, let's move. Okay. And then when it moves quickly. So you make quite a bit of percentage gains, right? Within a day or two or three, right? And sometimes a lot of those gains happen overnight, which is worrisome because you can't trade overnight unless you've got the Robinhood account. You can trade GDXU. I don't know if you can trade GDXD on the Robinhood account overnight though, or you can try Interactive Brokers. That's the problem with that. Otherwise, I just recommend you guys just stick around at AIBU and WebL because they're going to be slower and more it'll be more comfortable. Let's put it that way. It's not like a It's not like a G-force on a jet airplane, okay? This thing is just gonna be like a fucking Boeing 777. This is just gonna be going up until it completes its move. And it'll probably just complete its move once IGV gets up to the top of this blue level. So when IGV gets around to 87, that'll be probably be the end of that one. And then so that should maybe get you 30%. And that's it for like AIBU and WebL. I don't know if they'll give you 30%, but maybe 30 after it completes this whole move up here. So you already got like what 10 plus maybe 15 if you sold some today. So that's about 15% in 2 days. And then you'll probably have to see if this thing will complete its 30% move. If this thing completes a 30% move, so then you'll get 30 more percent, right? So that's it. That's it. What's red price for GDXU? I don't know. GDXU is leverage. That means you have to do the math yourself. So you take your GDXU, your GDX, you do your math. Let's say I go back down here. That's 4.72. 4.72 multiply by 3. What's that? What, 14%, I guess? I don't know. I'm not that good at mental math. So what? Let's see. What's that? 95? Whatever. Do it yourself. That's your homework. See? There you go. So anyway, whatever. Something like that. Okay. I'm done with that. All right. I think you guys know what to do yourself. That's why I said just follow the levels. Everything is about levels. Everything's about that. You have to do that. And then when you use leverage, you got to guesstimate. There is no direct correlation between IGV and AIBU or WebL. AIBU is just 2x leverage of some made up hokey ETF that they created. WebL is 3x of kind of FDN. I guess it's mostly follows FDN ETF, 3x of that. So I'm stuck here. There's no 3x leverage IGV. I have to say like, well, it's going to be a mixture of AIBU plus WebL, I guess. And if you want, you can add CrowdStrike 2x, so CRWL. You can add Palo Alto Networks leverage, PALU, and then you can add Palantir leverage, PLTU. It's like you could try to make it act like 3x leverage IGV somehow, some way, but that's on you guys how much risk you want to take, because then you're gonna take a lot of risk. But yeah, if CrowdStrike, Palo Alto Networks, Palantir, those three start going up very well, then those three will probably give you the most bang for your buck if you do all the 2x leverage ETFs on those three stocks. So if the software finally says, okay, we are done going down, we want to go up, then those three would be like going crazy fast. Okay, those will be the ones you're going to be watching for if that ever happens. Otherwise, you're stuck, because GDX, you have to get in, get out, because sometimes, well, actually, a lot of times during the day, you get a pop, right? Overnight gets the gains. You get a pop, you got to sell right away because it goes down. Pop goes down, pop goes down. Usually that happens. When it's in a really good mood, it doesn't do that, right? Like the last 2 days, you see, like today and yesterday, it kept going up throughout the day, but most of the time it pops and goes down because it lost its trend. It completely lost its trend. Okay, you can't do nothing with this. And I'll tell you this thing too, like what 2024, what OPC Don was debating on getting those gold coins from the Thorpes. He was like, oh man, his dad sold gold at the bottom. He's scared of gold. You see how bad psychology is? So I didn't feel like I should tell him to buy gold, honestly. If you look at the summer, gold was already at a pretty good clip going up. So I had a feeling that gold would probably go down one more time before going up. And I think the last quarter of 2024, it did start going down. Let me see if that's true or not. Probably not too much. It went sideways. Not really. Not really, though. But let's say OPC Don bought it like here, right? Sometime August, September. It goes up for a little bit and then starts going down. And then he gets scared because he sees, oh shit, went down 5%. I'm getting scared now, and goes sideways. You never know. Psychologically, he's not at a right place, because I was telling people to buy gold and silver back in 2023. This was the right spot to buy gold and silver. But if he buys it up here and he has the mentality that he doesn't even know what gold will do in the next few months, and he already has that bad impression of gold from his dad, then a 5% drop is enough to scare us. And I can't guarantee that gold is always going to go up in a straight line, right? If you have bad psychology, you cannot be an investor or trader, either or. You are part of the sheep class. The sheep class are the ones that always lose money. Okay, so that's why I can't recommend things to everyone. I have to understand you first. You might be better off not doing something, because you're going to make mistakes where eventually you'll lose money, because then you'll get into the mode of revenge trading. A revenge trader is one that just takes it personally when they lose a trade or an investment. Like, they hate that stock forever. And then you become a bigger moron. Okay, so let me let me review this guy for you, because I showed these clips before of this boomer, this moron who sold silver at $35 a troy ounce. And then when silver started going towards 120, he bought it back at 120, right at the top. So this is why it's like really hard to tell people what to do, because their psychology is not correct. And you're better off not even thinking about gold or silver anyway, because you might actually just end up losing money because you are an idiot. So that's really what it is. And most people are really idiotic when it comes to judging when a top or bottom is. And that's why we have tops or bottoms. If everybody was smart, everything would work like a machine. You would actually believe in the efficient market theory. The market is not efficient, it's inefficient. Because of liquidity issues, psychological issues, there's all kinds of issues with the markets, right? And okay, so yeah, that's it. That's all I want to say for that. So let me find that video if I can find it. Okay, blah 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 blah. Here are. Okay, nope, not this folder. I'll see this folder. This folder. How about this folder? Is it this folder? Nope, not this folder. Okay, maybe it's this folder. Oh, okay. Yeah.
Today, I'm distracted because of this bot. The AI has gone sentient. That's part of the news today. So I'm trying to install one for myself. And I'm trying to use Gemini to tell me how to do it. And I screwed up by saying to use Opus 4.5 instead of Sonnet 3.5. And now it ran out of tokens or something. So yesterday I bought silver. Hey, what a genius. Yesterday I bought silver. Yesterday was the day I decided to go out and buy physical silver, and I actually live streamed it and showed it to people. I could have gotten a lot more silver. Holy crap. Well, at least I think it's going up. No, that's not good. Let's see. Now it says 78 again. How'd that happen? So it's terrible. Terrible day. Oh, and this screen slows down my computer too. 70, is it really 78 again? Is it really? I'd have to check my app. It closed the day a little higher than 78. It says it's at 86 on Jam Bullion, so that's positive. And it still says they're selling for $100. So at least it's not the end of the world. I got them for 120. So silver crashed today. I'll tell you guys why. I got to tell you about these robots taking over the world. And once I get it set up, I'm totally distracted because I was spending the whole time before the show trying to set it up, and it sent me one message on Telegram, and then it said,
all right, so there's the tour. And I'll show you silver because Pirate Justin wanted to see the silver, so I'll show you guys what the silver looks like. We'll walk back to my vehicle. Oh, it's 4 o'clock. Hopefully today was a good stream. At least I did something. Yeah. Yeah, summer it gets pretty packed. Hey, thanks guys. You guys are cool too. I haven't done a walk and talk stream for a long time. So I bought silver. What's the price? Anybody want to tell me what the price is now? Hopefully it's gone up. I think they're going to run out of physical silver. That's what the insurance is for. If the exchanges run out of physical silver, then instead of everybody selling silver, everybody's going to want to buy physical silver. So even though the price might go down 50%, which it really might, I still bought some today. So was it 119 or 117, people say? 118? Everybody's saying something different. So for you, Pirate, you wanted to see what it looks like. So I'll show you what it looks like. Walking. Look. I'll show you my Beanie Baby. That's my Beanie Baby in my car. I bought a car when I was insane, or I leased it actually, which was kind of stupid, but it's kind of a nice car. Oh, okay, here, I'll show you guys. Okay, so I got, for Katie, we got this, which is, this is a silk. Let's see if we can get good lighting on it. Let me take off my glasses so I can see better. So this isn't like a normal wrapper. This is from some kind of company. That's a 2004. It's a beautiful design. And everything has like a special meaning. How many stars and like what the eagle is carrying in each hand and stuff. So I got that. And then I got one. This is called the proof coin, which actually should cost more, but I got it for the same price. The proof is mirrored. So if you want one of these from the US government right now, you would have to pay, God, from the usmint.gov website, I think these are like $200 right now, or $180 or something. So this is the proof coin, which has a mirrored finish, but I got it for the same price. So that's good. Yeah, see, they're really nice. And then that W there means it was minted at West Point. So we have a number of mints in the country. We have a mint in Denver. We have one in San Francisco. We used to have one near the silver mines in Nevada at, I forget what it's called. If you get Morgan dollars, when you're collecting coins, when they're from different mints, why am I keeping these in my car? Well, it's safe around here. And then this is how you buy them in bulk. They come in tubes like this. So these hold 20 coins. So this is what it looks like. So these come from the US government, Treasury, United States Mint. And And then you have 20 of these inside. I think I got 2016s or something. This year, 2026, is a special 40th anniversary year. So anyway, that's how they come. So nobody rob me, please. See, the problem with having physical is then you have to insure it and stuff. So I wouldn't want to have more than that, really, because then people will rob you. How much did I spend? I got them for $120 each. So I got them for $120 each, which is crazy because I sold a bunch of those last spring for about $33 each.
What the fuck? You sold at 33 and you bought back at 120. There you go. Moron. This is the kind of psychology you don't want to have. This is the person that you are trading against. This is the guy on the opposite end of you. You want to be on the guy that sells him silver at 120, buys it from him at 33. Don't be this guy. Be the guy on the opposite side of the trade. So psychology really matters, okay? It matters a lot. And if you don't have the right psychology, don't bother doing this. Don't bother. You're not going to make it. And you're going to be worse off, actually. So somebody like OPC Don, I could see, like I could tell him to buy something and sell something, but he won't really do it. He won't do it at the right time, I tell you. I told you guys to buy oil in February for a reason, okay? And it wasn't because I had a crystal ball and knew exactly where it was going to go in the next coming months. No, it was the conditions of oil that was really, really good. Oh, man. Here's another stupid image. So you remember, before we actually attacked Iran, JP Morgan said, like, oil probably will average about $60 a barrel. Okay? And you know what JP Morgan said December, all right, of 2025? So another month before that, JP Morgan said oil prices could plunge into $30. So if you listen to JP Morgan, you are also a moron. So that's another fact of life here. So yeah. Remember when Eric, you told me like, oh, is oil going back down to $40? I thought you were talking about crude oil. You know, that stream. It's just like, no. It barely even got below 50, right? How is it going to go down to 40? And if you really believed in JP Morgan, you really thought it was going to go down to 30 in December of last year? Gotcha, bitch. It's 120 now on. So there you go. I mean, don't listen to these idiots, man. This is like, fuck it. No. Real dumb. Anyway, yeah, happy Easter. Happy Easter. Yeah, I know I keep titling these streams the Via Dolorosa. I don't know if any of you guys ever been to Jerusalem before. I've been to Jerusalem once in the old city. So they have the little Via Dolorosa. And I think in Easter, a lot of people will reenact Jesus's path carrying the cross. And so they do it every Easter. Yeah. And yeah, you should definitely go to the old city. Check it out if you have a chance. If there's no war. Pretty cool. You can go to the Church of the Sepulchre. I don't even know how to pronounce that word. Sepulchre. And then there's the little alcove at the bottom where supposedly is the tomb of Jesus, where everyone prays at. So you can pray down there. You only have a few seconds to pray, but I think when I went there were very little tourists. So me and my friend got quite a good minute down there. Anyhow, they actually crucify a dude in Latin America. What? Oh, god damn. Well, they take that shit seriously, don't they? Okay. Anyhow. I've never been out of the U.S. Would love to travel. Yeah, it's going to be expensive now, right? You see, traveling before 9/11 is a whole experience, and now traveling with the crude oil at like what? International crude is 120, US crude is 100, so it's not gonna be cheap no more. Yeah, so that's about it. All right, let's get back to business here, and then we can wrap this up quickly. So remember, these are the levels for the next 3 months. 6840, that'll be the top of your S&P 500. The bottom should technically be around 6150. If we break it with force, that means you punch right through the drywall, we're going down to 5190. Okay, those are your levels for the next 3 days. And you can see this, a trap door could open up under the S&P 500 after this influential options trade expires on Tuesday. Large JP Morgan options trade expected to roll off on Tuesday. So I've been saying this since last week. Get ready for this. Get ready for this. So after options expiration, you have the JP Morgan caller trade that has to wash out. So there's going to be volatility, as we've seen in the past 2 days now. Down on Monday, now up very strongly. So after all this gets washed out, now we'll have to see where it starts going, right? We need the next shoe to drop. So what Trump is going to talk tonight, so maybe that's how it's going to be. Yeah. Let's see. What's notable about this trade is the sheer scale of these options orders. Their large size means the fund can exert a lot of pressure on the S&P 500 and introduce a noticeable amount of market volatility. No shit. I've been saying that already. Yeah. Thanks for telling us when it already happened. The JP Morgan is one of the most followed systematic option trades, said Ben Kizemchuk, a senior investment advisor and portfolio manager for Wellington Altus Private Wealth. It can exert heavy influence on market stability, quarter-end flows, and short-term volatility. Yeah, we see it. We see it already. Gotcha. So he also said that this volatility has already been manifesting in the S&P 500. JP Morgan is set one of the collar levels for this trade at 6475. That's the old level. Okay, 6475. We're now down to 6150 is the next bottom level here for the next 3 months. So all this stuff here is like falling down to 6475 from above increases potential sharp snapbacks. Yeah, I told you that already. I showed you a video of that already. 6475 from below can trigger a forced dealer selling. Well, we didn't really see that because we're going into the end of the quarter in the last few days, so it didn't bother doing that. Everybody was on the other side of the boat. Okay. So once these collar level resets, the market should react less violently to daily news. Well, one should hope. So hopefully now everything will calm the F down, and then we'll figure out what's going to happen when earnings rolls around. Because if we're completely done with the Hormuz Strait, we're leaving. So America's leaving, right? Is this an April Fool's joke? He said we're leaving. Trump said, bye-bye. We don't care. This is not our problem anymore. This is Europe's problem now. Okay, well, if he's really gonna do that, it's not April Fool's, then I guess we're done. Let Europe deal with the issue. Oil for the global market will stay at probably about a $90 level until Europe opens up the straits, but China's probably fine. China will get its cheap oil. Doesn't care. They already made deals with Iran. Russia already have deals with Iran. We're done, right? We're leaving. Bye-bye. So we tucked our tails and are going back through the Red Sea right up into the Suez Canal and leaving. So this is Europe's problem. All right, I got murdered. Why did you short? What? I said everybody should go long Sunday night. What the heck? Why would so you buy Monday and then you sell once the S&P gets back up to 6,700, whatever. That's easy, right? I thought everybody could see that. No? Okay, whatever. Oh yeah. Let's see. That's why likely most have until my choose. Oh, you're gonna have a YouTube trivia channel. Okay, cool. Follow Quantum Epic, or are you gonna make a new channel with a new name? I don't know what's gonna happen here. All right. Once Iran gets people on yuan, we're rolling tanks. Oh, you think so? I think it's the end of. I think America's tired of wars. I don't think we got it in us. Are we going to defend the U.S. dollar power here? Anyhow, okay. Let me wrap this up. Let me wrap this show up. Just 10 more minutes or so. Well, so let's continue what I was talking about. George Soros's theory of reflexivity. Okay, let's remind everyone. It's based on the idea that investors base their decisions on their perceptions of reality rather than reality itself. This feedback loop between expectations and economic fundamentals can cause price changes that substantially and persistently deviate from equilibrium prices. Soros believes that reflexivity contradicts most mainstream economic theory and can significantly shift our understanding of economics under modern economic models. He explains that if investors believe that markets are efficient, that belief will change the way they invest, and that in turn will change the nature of the markets they are observing. Soros views the global financial crisis as an illustration of that theory. So again, we have times when the stock price gets extremely expensive compared to what a company technically should be worth, right? Well, technically meaning what people can see today. So all the information that they have today to gauge where the stock should be worth, that's all they have. And they'll just overpay for something if they feel like there is future growth, right? Let's say, Palantir. Palantir is the most expensive off of all the software companies. It's like 100x price to sale. Okay, very expensive, even more expensive than Oracle. And that's why people didn't believe me when I said Palantir is the stock to be in, because there is good reflexivity in there. There's a lot of hype in that stock. And as you can see, Palantir went from $20 to like 200, nearly 200, right? When I said it over a span of a year. And there's a chance that if the economy is going to go down, it'll be a great short, because then if the AI bubble pops and when you short it, it goes deeper than it should. Okay, so that's reflexivity. So a stock that's very aggressive on the upside will also be very aggressive on the downside. Same thing for Micron. Micron probably will also follow this path. So when it does turn the tide, and if Micron really does crack in the coming quarters or something, it will go down very quickly. So those are the kind of stocks you want to look at for when there's a turning point. Okay, they will wind down the war now. We win. Okay. All right. If we win, we win. That's good. Fine. Keep going up then. Keep going up to 6,800. I don't mind. Remember, the collar now is 6,840. That's the top of the S&P 500. So if the market really wants to move even higher, there you go. That's the target you're looking for. Okay. So remember, I was talking about the contrarian psychology, right? So only a few more minutes. I'm going to remind you guys. So behavioral finance, broadly defined, has given us a fairly comprehensive understanding of investors' real decision process. So remember the guy who bought that silver at 120, sold his silver at 33 for some reason, and chased it back up. He got FOMO. He got FOMO'd out. It has taught us to set aside the time-worn fiction of economic man, the well-informed, utility-maximizing homunculus with stable preferences and superb computational skills in favor of more realistic models of choice under risk. Investors, we now see, are prone to cognitive errors, reluctant to realize losses, and overconfident in their own ability, but fearful that other market participants know something they don't. So this last bit here is why people believe bullshit like JP Morgan, right? JP Morgan said oil is going to go down to 30 bucks. I don't know if they really said that, but that was the tweet given. Moreover, investors seek not only utilitarian rewards, but expressive and emotional benefits as well, such as status and a sense of belonging to a community. Sounds like a cult. So all those silver guys are probably all cultists, right? I always see them around, silver. They seem to act like a cult to me. Thanks to Herbert Simpson, Daniel Kahneman, and Richard Taylor and Mir Statman, and many others, we have a general psychology that illuminates the cognitive and affective recesses of investment decision making. So I'm always the guy that follows the contrarian. Okay, so let's go down here. Emotional crowds. So the first principle is that security prices are predominantly set by emotional crowds comprising investors whose purchase and sale decisions are based on heuristic shortcuts, anecdotal evidence, and visceral reaction to unfolding events. Sound familiar? Oh man, we got war. Chase oil, chase oil. Okay, you guys just want to chase oil, huh? Don't you? So anyhow, okay, all right. So in terms of Kahneman made familiar, okay, what did he say? Emotional investors operate primarily at the system or at the level of system one. Their thinking is fast and automatic. Emotional crowds, Howard says, are propelled by two forces: a deep-seated aversion to short-term losses, ding, 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 people that sell too early or get scared out of their position on noise, and a compulsive need for social validation. Oh, that second part, I see. Okay. So BPM assumes, as others have established, that markets are not very efficient, nor are emotional crowds wise in the sense that the averages of individual market participants' valuations would lead to approximate securities' true, fundamental, or inherent value. James Sorowetsky identifies four conditions that characterize wise crowds: diversity of opinions, independence, decentralization, and aggregation. Emotional crowds in the financial market satisfy the last two conditions. Participants can draw on their own resources, and there is a mechanism, pricing mechanism itself, for reducing many individual judgments to a collective decision. But emotional crowds are unlikely to exhibit a strong diversity of opinion, and their members are certainly not independent in Sorowetsky's sense. It cannot be said that people's opinions are not determined by the opinions of those around them. On the contrary, in emotional crowds, people take their cues from one another. They think what they think others think. That's a good sentence there. They think what they think others think. For the present purpose, it is enough to treat the emotional crowd as an assembly of undifferentiated investors. Indeed, from one perspective, it seems entirely fitting. The self can be submerged and carried along in a mass movement. Nonetheless, a more granular description of the crowd's composition along the lines, for instance, of Andrew Lowe's species of investors might facilitate empirical research and lead to further insights. Traditional index investing is a trend-following strategy. So people that just buy and hold the S&P 500, for example. Constituent weights rise and fall with prices and contributes to stock market volatility. But passive investors do not necessarily belong to the emotional crowd. The decision to invest passively does not in itself indicate anything about an individual's cognitive style. Howard's view of the price-setting mechanism does not rule out the possibility of rational investing. It does, however, call for a new kind of rationality in investment. In this view, rational investors are continually aware of other market participants' tendency to overpay and overreact. So you want to be the guy against that boomer over there who bought silver at 120 and sold silver at 30. That's the guy you're going against. I'm not trying to fight JP Morgan. I'm not trying to fight the big dog. I can't win. They manipulate the market directly, right? They have trillions of dollars at their disposal to shake up anything they want. They have armies of traders. I'm sure they got insider intel. How can I beat them? But I can definitely beat the guy on the street. You don't want to be that loser on the street there that just did that. Okay, so there you go. I think that's all I gotta say about that. Okay, well, we're done with an hour. I mean, I think this article's fairly good. It's pretty long, so I'm gonna go read through pieces of it for the rest of my time here. But I'm really just gonna work on the Substack from now on. I really don't need to tell you too much. I told you exactly what to do from January up till now. That's one quarter, right? In February, remember, late January into early February, buy oil. That trade is over with. UwU went up 100% from when I told to buy. That's good for 2 months. Now, the rest of this stuff is just like day trading, mechanically trying to figure out, whoa, why buy or sell at this date or that date, depending on the levels. That's it. But it's probably only going to interest a few of you. All right. So what's up, 12th man? We'll be done here. Just get a point of view. Don't be the boomer. Yeah. I know. I wish Grok gave free images, but they stopped giving free images. Man, Grok was one of the most imaginative. Oh man, these guys always want money now just to use their little tools. Oh. So I ended at this schematic. I thought this was really interesting because if you ever took electrical engineering or information theories, well, information theory can also be language too. So maybe because Claude Shannon, the father of information theory, a lot of linguistics came from his theories too. So this not only matters for electrical signals, radio signals, and also encryption also comes from this theory here. But it looks like this whole paper is going to take trading psychology and turn it into an information theory problem, I guess. So I haven't read too far into this thing, but I'm guessing it's going to be interesting. So one important version of contrarian investment theory sees security prices as noisy. That's true. I do consider it noise. In information theory, noise in a transmission channel distorts the information-bearing signal. That's right. We're getting tricked, right? By JP Morgan, perhaps. So they think the market's going up now, but you're going to get trapped. You thought the market was going to go down last week, and then you got trapped for this week because you thought it was going to keep going down. That's noise. So this is what we want to avoid, separating the signal from the noise. Can we do that? All right, guys. So this was a short one. I'll come back around later tomorrow, I guess, and then we'll have Good Friday. Good Friday, the markets are closed. But yeah, I told you guys so long this week from Sunday night. Still working. I don't think there's any reason to really try to short. I did start shorting semiconductors again because it did hit its level. So every time it gets to that yellow area, I just short it again. That's really how I just do it. So let me show you that real quick if you guys don't know. And then I'll end it there. Because it still works. I don't know. There's nothing really I could say there where it doesn't work. It always seems to work. Okay. Yeah. Every time it gets to the yellow, I just short. Time was up here. I shorted it. It got a little bit inside the yellow, but not too uncomfortable that I got tricked. Because that could be noise, right? That could have tricked me. That could have been like, oh shoot, maybe I'm wrong. Maybe it's going up, and it would have fooled me. But if I did that, I would have missed out on all this. Because then the market went down. Now we're all the way back here into this yellow area on SOXX. What does that mean? So if you want to short, this is how I do it. I use SOXX. S ends with an S. Okay, so I guess you could say every time it gets below 36, you buy, and then you just see how far it goes back up. Eventually, it'll stop doing this dance. Eventually, it will say time for the market to really crash, and if you catch it right, you go from here, you could go all and you'll make 100% the other way of complete. But if it just goes up and down like this, I guess that's okay. I don't know. It's annoying because you got to pay more attention, but that's really what you got to do. There's no guarantee. I can't tell you exactly when it's gonna fall, and that's why I don't do options. I don't know exactly when something is gonna happen, right? Because if I do options, I have to take care of volatility, how it goes up and down. I also have to take care of when it's gonna go to that price, right? So there's a strike price. So options requires me not only to know the time, price, but also volatility. And that's a 3-dimensional problem, and I don't like that. Come on, bro. I retired. I'm not an engineer anymore. I'm not gonna do 3-dimensional problems here, motherfucker. I'm trying to turn my brain off and make money, not make it harder. But of course, there's a definitely. I'm not saying that there's not any ways to make money on options that require you to think too hard. Most people, they develop ways to use options to turn off their brain and make money anyhow. So I don't want you to think that options is too hard to do. Okay, my show is just general information, and once you understand charts, you can see what I'm trying to do. The next level up is that you go find a book, or you go find another YouTube channel. There's tons of YouTube channels out there that teach you options, and tons of people that are willing to teach you that as well. And if you don't want to read books, and you could do it, okay? You could totally turn this type of movement into lots of money. Okay, not only like movements where it goes up and down, you could also be like, I know the semiconductors are gonna be flat. They're gonna stay flat for 1 quarter. Let's put it that way, right? So if I start an options trade at the beginning of January, I would say, like, for the most part, the S&P 500, I mean the SOXX, stay maybe or close to $320, $330. And I could make an options trade where, like, by the end of the quarter, it stays close to there. So I would make money throughout the 3 months, because it just pays me somehow. I don't know. I should put up that chart. I had a huge chart, a cheat sheet of options that you can get, and print it all out and put it on your wall. Okay. Okay, let's see. Cracking a formal presentation on step-by-step of shorting for max impact. Platform prefer, I think. Yeah, I'm too basic, you know. I think there's other people that are better at this. But yeah, sure. One of these days, I'll just show you step by step how I do it. But it's probably very, very basic, very babyish, which is fine. I think a lot of you can learn from that anyhow, and then from there you can learn more somewhere else. I'm gonna try to get in a pump. Tomorrow things gonna dip further. Dude, Eric, tomorrow is the last day of the week, trading day of the week. There's Good Friday. Its market is closed. So if you make a mistake, you gotta hold through the whole 3-day weekend for the market, man. All right. Okay. Anyhow, I'll see you guys later.